So once again, this is actually going to be pretty much a actually snippet of what we're going to be dealing with when we dive into our fictitious business, right? I'm going to give you a scenario, a bunch of transactions that we have to consider. Is it something that we need to journalize? And this is one of the aspects, right? So when we dive into the fictitious business, we are going to be looking at starting a company from scratch, from ground zero, all the way up to the sales process, to all the way up to running the business itself. So therefore, this is just only one piece of the actual fictitious business, right? Is looking at inventory. And we're looking at an example here, which is perpetual inventory. Okay. Once again, you have the scenarios. The dates are all here, right? We're doing a whole month's worth of transactions here. So let's go ahead and dive into the scenario. And the question says here that your inventory method is perpetual and it is LIFO. So keep that in mind. LIFO is very important. Okay? And assume that sales tax is again 8.25%, right? We'll use that for our scenario 2. All I will need you to know is that it's 8.25%. So once again, here is the Excel worksheet that allows you to give you your chart of accounts, right? So there's another precursor there that we need to, in order to journalize any of our transactions, you need to have a chart of accounts, okay? Second thing is, here's the inventory worksheet that we're going to use to calculate our perpetual inventory. And last but not least, here is your general journal, okay? Once again, this is just a snippet of, this is probably like what, 1/4, one quarter, 1/8 of the work that you're going to be actually doing in the fictitious business. So this is only looking at one aspect, which is just the inventory part. So let's go ahead and take a look at our first scenario here, right? This is our second time going over this. So let's practice and practice how to journalize this. So first things first is on June 3rd, okay? So here, this is just saying that we don't actually have beginning inventory. So this isn't a continuation, because if there was, I would have given you that on May 31st, you should have, or May 30th, you should have had something. In this case, we're starting from ground zero. So June 3rd, we decided to purchase 1,000 black mugs for $3.65 each, okay? And the freight's gonna cost you $100. And you're gonna place it on an account from Cuppy's Co. Terms is 5%, 15 net 30. So first things first is general rule of thumb is if you're going through the accounting cycle, they always suggest you first things first is we have to journalize first. Now, of course, we can take this information and go directly into the inventory worksheet. However, you should always recognize the transaction that happens at hand because, for example, when we do our sales, right? Not only do you need to complete the journal for the sale, you also have to update your inventory at the same time. So let's go ahead and take one thing first is, what was this transaction? We bought inventory, right? And I'm already gave you that it's perpetual inventory, right? So let's go ahead and take a look at our chart of accounts. What accounts can we use if we are making purchases of perpetual inventory? Mugs, excellent, right? Because when we think about perpetual inventory, we put everything straight into inventory. So perfect. So my mugs is account number 150, all right? What other account will I be needing to use?
Accounts payable.
Accounts payable, because we place it on an account. So here, accounts payable is 201. So let's practice in journalizing this right now. So we're on general journal page number 1. Okay, so the date here is June 3rd. What am I going to be recognizing first? Mugs, right? We're making purchases of inventory, so therefore we're increasing our assets. Okay, account number 150. Okay, what's going to be my Equal and opposite credit account.
Accounts payable.
Accounts payable, right? Because we're increasing debt that we owe. Accounts payable, right? Account number 201. So once again, you have two options here. You can stop here and go work your number into your inventory worksheet and then come back and fill in the rest of the information. So in this case, that's exactly what I will do. So scenario number it says that I purchased 1,000 black mugs at $365 each with the freight costing me $100. So inventory worksheet, it is June 3rd, and we purchased 1,000 items at $3.65 each with a freight costing me $100. So therefore, what is my total purchase price, and what's my total purchase price?
All right, so total purchase price or purchase price is going to be 36.50. Total purchase price is going to be 37.50, which comes out at 375 a piece.
Okay, so yes, we multiply quantity times the unit cost, which gives me 3,650. Then we add the $100 freights, which gives us 37.50. And yes, so we take our cost per item is going to be my total cost divided by the quantity of 1,000 to get me $3.75. Is that what you said?
Yes.
Perfect. Okay. Since this is our first batch of inventory, what's the next thing that we got to do?
Log it in.
Yep, we got to place it into our inventory worksheet. Okay. And remember, what method are we using?
Last in, first out.
So this is LIFO. Okay, last in, first out. So in this case, where should our formula lie in? It's going to be your total cost. So again, it's going to be your quantity times your cost per item to give you a total of 3,750. All right, if you need to use colors to associate which batches belong to what, do it now. Okay. So here, I solved for one thing. What was my total cost? $37.50. Okay, so therefore, I'm going to go ahead and go now to my journal and fill in that information because now I know it's $37.50. Okay, and okay, all right. Now, of course, your description could be whatever you like. Usually, rule of thumb would be your vendor, right? Who did you owe? We owe Cuppies Co.
Didn't we
Okay.
get a percentage off too?
All
It's
right. Now, what do you mean by that? You want to take the discount now?
no. Do we leave that in the notes?
Yes, absolutely. That's definitely something that you should. I mean, you don't have to, but I mean, in this case, because I haven't introduced you to the subsidiary ledger yet. But when we get into the fictitious business, there's actually a real place you put that information. Okay, but for now, that's definitely something that is useful, right? Here you could say I purchased 1,000 mugs, right, at $2.65 each, or sorry, $3.65 each, right? And I was given terms, 5%.
15 or net 30.
Okay, good. So there you go, right? That should be enough information in regards to that.
I have a question.
Yes.
We're doing perpetual inventory. Oh, wait a minute. Before I have. Okay. Yeah, the one thing I just noticed is, are we doing net or gross method?
Okay, so in this case, I only taught you net method, just for you to know. But for most cases, it's just going to be gross.
So we're gonna take it later. Okay, I
Yeah.
just wanted to know.
Okay, yes, because the thing that we have to know here is that everything that you do is going to be most likely going to be gross method because the idea here is you only take the discount when we pay it, right? That's the purpose of doing the gross method.
Right.
Okay, so in this case, we're just going to assume that everything is going to be, we're just going to recognize what it is now. And if we make the payment, then we take the discount. If we don't, then we don't need to care. We don't need to journalize it now.
Mm-hmm.
Okay. Good. All right. So there we have it, our very first transaction. I have my journal complete. I've entered my information in my worksheet. So then what has happened next?
You return 50 broken mugs for a full refund.
Okay, so here on June 5th, we returned 50 broken mugs for full refund. So let's take a look at my chart of accounts. Okay, let's see how can we utilize or organize our ideas within these accounts that are given here. So if I return something, right, and I got a full refund, what am I expected here? What should my journal look like?
Accounts payable and mugs.
Okay, excellent, right? Because we're making a refund, right? In this case, my original purchases, I placed everything into inventory. So therefore, where is it? Everything's in inventory. If I'm making a refund or I'm returning these 50 broken mugs, right? The vendor's gonna, same thing, right? We gotta take it out from where we placed it in. So in this case, we are going to be taking everything out directly from our inventory. And on top of that, we never paid my vendor in the first place, right? Because it's June 5th. I never paid them. So therefore, the only option is for the vendor to give you a full refund back is to reduce your debt or the money that you owe. So that's good. So we're going to reduce the money that we owe. Okay? And we're also going to reduce the mugs. Okay? So account number 201 and 150, right? So here, you can either choose to either do it manually here or let's go to our inventory worksheet. So I only have one section here. I only have one. I only have one batch of inventory items that I have actually purchased. So in this case, how do I determine how much it cost me for those 50 mugs? Okay, so in this case, I'm going to do negative because I'm actually returning, or in this case, they're broken. I can't use them. Even if I ship them back to them, they're probably going to not want it either. So in this case, 50 broken mugs. How do I determine the total or what cost per item I'm going to use for each mug if I'm doing a full refund?
Would it be the unit cost?
The unit cost of how much?
365?
$365, right, because we can't return freight. Okay, so the only thing that we can return is just the original purchase price, so which in this case is $3.65 each. So in this case, what is my grand total that I'm going to be refunding?
182.50.
Okay, you multiply these two together, $182.50. Okay, so from here, how do I update my inventory?
Minus it from the inventory on hand.
So we're gonna, yes. Okay, so I have 1,000 items and I returned 50. So how much should I have left?
950.
You should have 950 items. Now here, you still want to keep your total cost there, but you're gonna have to actually refigure out your new cost per item, because in this case, I still have my total freight, but now I have less items to actually distribute the freight across. So in this case, right, I need to, I have a new total cost, which in this case is the 3,750 minus the 182.50. So therefore, I need to recalculate my new total cost. So in the cost per item. So in here, you could actually do it here. So then you would get your total cost to be whatever it is. So in this case, I'm going to do parentheses because I need to figure out what my formula is going to be. In this case, it's going to be 3,750. Subtract out my 182.50, right? 50 cents. Close parentheses. And then I'm going to divide this whole entire amount by my quantity of 950 because that's how much I have available. So in this case, what should be my new cost per item?
376.
376, or in other words, if you expand this out, it's going to be more than that. It's going to be 375,526. Okay, and look here, my total cost is going to be my 350.6750, which is exactly what you get when you subtract these two numbers out. Okay, so that means every time I enter in a new quantity, it's going to multiply by this. So you're going to get a new total cost here. So excellent. Okay, so now I have the given information, which is that I should get a refund for a total of $182.50. So back to my journal. Why we got a refund for $182.50. Okay. All right, and my description is, what should be my description be?
Return 50 broken mugs for full refund.
Good. Return 50 broken mugs for full refund. Good. All right. So here we have it. We completed our journal. We updated our inventory. Okay. All right. Is everyone good so far?
Yeah.
So then, what has happened that very same day?
You sold 100 mugs at $10 each for cash.
We sold 10 mugs. I'm sorry, 100 mugs for $10 each for cash. Excellent. So, therefore, how am I going to record this in my journal? Let's take a look at my chart of accounts. What accounts am I going to be using?
Cash.
Yes, we sold it for cash. Good. What else?
Sales and sales tax payable.
Sales and sales tax payable. Good. Okay.
Mugs because you got to take it out of inventory, right?
Mm-hmm. What else?
Sales tax payable.
We already said yes to that.
Would the other one be when you take the mugs out of inventory, you put back into accounts payable?
Okay, so accounts payable is us dealing with our vendors.
Oh, that's right. We're okay. I was thinking. Never mind.
Okay. So let's just journalize that part first, and then we'll go ahead and journalize the second part right after.
Would it be cost of goods sold?
Excellent.
Oh yeah.
Because think about it, right? If you sold, first off, we need to recognize that we sold the product. All right. Now, how do you expense it or take it out of inventory? You need to figure out the cost it cost you to sell that item. So therefore, cost of goods sold. So if it cost you this much to sell the items, therefore, that's the reason why you can go ahead and update your inventory by taking that amount out, because those mugs that you take out was exactly how much it cost you to sell those cups. So so let's go ahead and focus on the very first one first, because we need to be able to sell the items in order for us to be able to update our inventory. So this was June 5th. So how are we going to journalize the first section, which is recording the sales?
Cash.
Yes, we received cash, right? So therefore, we're increasing our asset. Okay. What else are we going to have?
Sales.
Sales, right? Sales is what we did, right? We sold items, so therefore we need to recognize sales, and therefore sales tax, because we have to charge sales tax. Okay. So this was, what was the cash account?
102.
102. What was my sales count? 401. And what was my account for
30.
230? Perfect, thank you. All right, let's figure out one things first. So we sold a total of 100 mugs at what price?
$10.
$10 each. So what's my total sales here?
1,000.
$1,000, okay? How do we figure out the sales tax on this? Okay, so again, I'm gonna just calculate it here, equal round, right? We're gonna take my 1,000, multiply it by my tax rate, and I want it into 2 decimal places.
85.20.
You mean 8250?
8250.
Okay.
What?
Did you type in the 5 and the 2 the other way? Okay.
82.50.
8250. So therefore, in grand total, how much cash should I be receiving? 1,082.50. And here, it's up to you if you want to place it in here. But once again, if I'm doing my second journal, which is directly correlated to this one, I can just skip this description because it's going to be the same for my cost of goods sold. So let me go ahead and put the date as well so I recognize this. So we sold something, right? So we need to calculate the cost that it took me to sell these items. And once again, we mentioned that because we're taking it directly out from our inventory, we need to subtract out the mugs that we sold. So what account is my cost of goods sold?
Cost of goods sold was account 501.
501, and my inventory should be 150. So now that we have our foundation here, right? Instead of having to figure it out, here, let's go ahead and go into my inventory worksheet and recognize that we actually sold something. So here, the date is June 5th. How many items did we sell?
100.
100. Okay. At what cost?
$10.
Okay, that's my selling price. What's the cost of this?
376.
376. Okay, but in this case it says 37555. So remember, if you do round your answers, you will be off of by a couple pennies. Okay. So here you go, 37552. Okay. So this is where we need to apply our equal round formula once again because I want nice numbers, and on top of that, we're journalizing this number. Rules in the journal says that you have to do it in terms of dollars. So you can't be charging or expecting a customer to pay half a penny. So here you go, equal round. We're going to take my 100, multiply it by my cost of the 3.7552. So what is the total cost of my goods sold?
375.53.
$375.53. Okay. So since I have this number right here, we could go ahead and journalize that. But first, let's just update my inventory so I don't forget. So in this case, how many items do I have left?
850.
Okay, so we went from 950 minus 100, right? So let's just make sure that we take a look at this. So 50 minus 53, so we should end with 97. And we do, right? $3,191.97. Okay? Yes?
So we have the 9. Oh, 9. Sorry.
Okay. So yes, it should be, yes. Okay. All right, so everyone good here. Now we updated our, we solved for our cost of goods sold and we updated our inventory as is, right? Since we only have one batch and one batch only, your only assumption is that you're only going to be taking out from that direct batch. We don't have other batches to deal with right now. So right now, even though we're doing LIFO, you only have one batch to take out from anyway. So in this case, we're directly correlating it to this batch right here. And we solved that the cost of goods sold here was $375.53. Okay. So once again, now I can go finally back into my journal and say that it cost me $375.53. Okay. And then now for my description is you can say that you sold 100 mugs. Okay? Any questions here? Or I mean, so we updated our journal, we updated our inventory, and that's it.
Can I see the inventory worksheet real quick?
Yes.
I have my quantity for inventory on hand at 850. I got the 37. I don't know why I have an equal or regular flat 375 on the cost per item.
Did you type it in or did you actually enter in a formula?
I entered the formula in earlier, but when I put the quantity of 850 in, it changed it to 375 even.
Okay, it's because you self-referenced it. Because I typed in my formula. I typed in 950.
Okay, so the formula there should be right now 850.
No, it should say 950 because that's what you have goods available. You cannot self-reference this one because if you do self-reference it, that every time you change the quantity, it's gonna automatically update your cost.
So the cost per item right now the formula should be the 3750
Uh-huh.
minus the 182 times the 950 divided by the 950. Okay, got it.
Okay.
31.91.97.
Perfect. So remember, the cost per item, this one you have to be very careful. You can't use any cell references except for anything that's on your little middle section where it says inventory worksheet because that way, these numbers are never going to ever change. The one in the inventory on hand, we know for a fact that we're going to always be constantly changing the quantity because, every time we sell out our items, we need to update what's our inventory on hand. So here you cannot self-reference anything except for the formula for the total cost, right? You have to self-reference the quantity times the cost per item. But here, you can't do that because of the self-reference idea. You can easily make any changes and it could mess up your entire worksheet. Okay? So is everyone okay with this? Okay. All right, so let's go ahead and take a look at the next portion here. Okay, so then what has happened on June 10?
We sold 250 mugs at $10 each.
Okay, good. To who?
8 on account terms 10, 15, 30.
Perfect. So Here we sold to customer A. We sold a total of 250 mugs. Okay? So therefore, how do we journalize this? What accounts will we be needing this time? Okay, so inventory is going to be part of it, but not the same, not in the same journal, but okay. We have inventory, we have accounts, what was it?
Payable.
Not payable. We're not owing a person.
Accounts receivable.
Accounts receivable, right? Because we sold to a customer. And they owe us the money. So accounts receivable. Okay, what else are we going to be looking at?
Sales and sales tax.
Sales and sales tax. Good. All right, so let's go ahead and go to our journal here. All right, so once again, it is now June 10. What should my journal look like? If I sold to customer A on an account,
Accounts receivable.
yes, we received an IOU in a sense, okay? What else did we do here?
Sales.
Yes, right? We have to record the sale has occurred. Sales in sales tax payable. All right, what was my accounts receivable account number? I think it's 103. Sales account. I can look right above.
Account was 401.
And 230. Okay. So if I sold a total of 250 mugs, at what price? What did I sell it at? $10 each? Okay, so then therefore, what is the total amount of sales I've made? 2,500. Okay. Once again, how much is going to be my tax? 206.25. Okay, so therefore, in grand total, how much does customer A owe me?
$2,706.25.
Excellent. Okay. And now this one, you definitely want to have a description for because we sold this 250 mugs to a particular person, right? In this case, we sold to customer A, okay? How many cups did you sold? 250 mugs, okay? And we also gave them terms, right? We gave them 10% if they paid within 15 days. If not, they need to pay the whole thing in 30. Okay? Definitely something that you definitely want to keep records here is because we're not doing this to any stranger, right? We actually know exactly who we're charging this account for, right? We sold it to specifically our customer. Okay? Okay? So here we got that completely down. So what comes after that?
Inventory.
Inventory, right? Now what do we do with the inventory?
Cost of
Got a
goods sold.
cost of goods.
You gotta figure out the cost of goods sold. And once again, it's gonna come directly out from my inventory. Okay. So now that we have that, where can we figure out how to solve for the cost of goods sold? The inventory worksheet. Okay. So once again, let's take a look at our inventory. What batches do we have?
The one batch.
We only have that one batch. So therefore, we sold 250 at what cost?
5526.
So therefore, by doing my equal round formula, what is the total cost of goods sold?
938 and 82 cents.
93882. Okay. So there we have it. Our cost of goods sold is this amount right here. Okay. Since we're already here, let's go ahead and update our inventory as well. So if I have a total of 850 and I sold 250, what should I have remaining? 600. So therefore, let's double check this. So 97 cents minus 82. I should have at least 15 cents left, right? And, oh, see, now it tells me that I have this. So this is where you're going to have to make sure that your calculations are clear. Because in this case, it rounded a penny up. Okay, I'm supposed to from 97 to 82. 97 cents minus 82 cents should give you 15. In this case, it rounded up to 16. So this is where you're going to actually have to place this on the side, because now we have to recalculate our cost per item. Or actually, no, not recalculate our cost per item. The cost per item is going to always stay the same. We just have to make sure now that because of that calculation, right, it increased it up as a penny, right? Because if we extend this out, we know that this is going to be a lot, it's going to be, 15.79, okay? You could keep this in here if you like. Just make sure that you know that at the end of the day, that it is 15 cents, not 16. So actually, I'm just going to leave it in here at this. Just make sure that when you're looking at this, you know it's 15, not 16. Okay. But here, at least we know that this is still holding true. Okay, it's still the 15 cents. But yeah, just keep that in mind. Because of the number that we're using, and I didn't apply an equal round, right? It would have rounded it up. So that's why I was saying it's very dangerous, especially when you have half a penny, right? You can round up on both ends, right? Rounding up on the cost of goods sold and as well as rounding up on the inventory on hand. So at least we know it should be at least 15 cents. Okay. So here we solved for the cost of goods sold to be $938.82. 93882. 93882. Okay. And once again, this is where you can also say, because you definitely want to make sure, because what if customer A decides to return some of these mugs? At least we know where it came from. So in this case, I'm just going to write, what is it? Sold 250 mugs to customer A in case they decide to return. Okay.